Yo, what's going on? It's your boy Montego Ramon, man, back with another video. I have music playing on my Bluetooth, and I hope that it doesn't pick it up in the video. I got my daughter over here sleeping at work with me. So look, man, we're gonna hop right into it. Bro, not this one. Hold up. Where'd the thing go? Oh, there it go. Boom. So I took this trade late this morning when I got off. I should have been looking at it, saw it right when it made this move. But this would probably require me to check the charts a lot more often. I should have been looking for this though. So as you can see, let's just follow it on here. Coming off of yesterday's moves, literally fair value gap fills. I'm not sure if this is a fair value gap fill here, but what I'll do is we'll place a horizontal line and we'll trail that back over. Let's trail this all the way over. Yes, huge fair value gap right here. Huge fair value gap. And we even have more room beneath there. So let me drag this on over. Do we have more room beneath there? No. This is a fair value gap from June 2026. Early June. We've been on a run for a while though, so that lets me know that it might even be levels below here that may need. Nah, that's pretty much mitigated for the most part. Okay, so let's I'm gonna take this all the way over. Watch this. I'm gonna drag that over. I'm gonna drag that over. And we're gonna keep an eye out for that. And really, I need to make this smaller because this much of the gap has been filled. So cool. We're gonna keep an eye out for that. So as you can see, let's pull out the boom. Okay, in this car, I actually do need to go ahead and get the stand so that we can just pop this thing up and then I don't got to hold the phone with my hand anymore. Okay, so look, as y'all can see, this is Wednesday. So Monday we kind of did have a consolidation. There was a few moves there. It's kind of confusing. Don't recommend trading that. This was a nice sell-off. We made this move down, right? I think this is also inside of a fair value gap. And then we shot up from there, right? Shot up from there, coming back to fill this gap over in this area, right? Can fill this gap in this area. Then we immediately rejected that and sold off crazy in the New York PM session after lunch, right? We closed that day, right? We closed that day, and then we touch inside of this fair value gap, which starts at this yellow line, I believe, or it was somewhere above there. Actually, if I do this, watch this. Let's do this. I'm gonna go back, 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 back. So that's where the original fair value gap started. Now the orange line is where how much of the fair value gap we have left that needs to be mitigated. We've pulled back into this area of resistance basically here. This area of resistance right here is holding up decently. Everything within here is being rejected. And basically holding this ground, as y'all can see. If we would just take like even a line, take a little trend line, and this area is holding for the most part. It is holding for the most part. I don't know who this guy is putting him next to me, but whatever. Yep. So this guy pulling it. All right, here, pick somebody up. But yeah, as you can see, that's pretty much holding. This area is really a bigger zone. If I had to draw the zone, it'd probably look more like this. All right, probably look more like this. Where right now we're actually getting a rejection too here for a sell potentially into this area. We actually might take this sell. But look, there's also a smaller fair value gap that's reaching inside, but we're rejected out of that, and I think it could potentially come down to, we have a small fair value gap down here. We have a small opening right here. And as you can see, what happened was, as we rejected down from here, from these levels, this level, came down here, we rejected from here, we started to get a slight, I would say we really got a slight shift of structure, and then it reached inside, it created a fair value gap here, right, in this blue area, and then we just started getting this uptrending structure, and I'm seeing it just continue to make uptrending structure, and I decided to finally hop in on this pullback for this fair value gap right here. There's a fair value gap in this area, and then as soon as we pull back into that, I entered a trade, and we started getting a push up. We had this strong pullback. I knew we was gonna probably get some volatility, maybe a possible turnaround, and I was just prepared for that with the proper risk and everything like that. Just in case the trade decided to go against me, I held my ground. I didn't trail my stops on this one, and then pretty much we got that, just continue creating that uptrend structure of higher highs, higher lows, higher highs, higher lows, right? Higher highs, higher lows. I ended up getting out of trade basically at the top of this fair value gap right here. It's a fair value gap basically right along there, and I ended up getting out of there, right? I ended up getting out of that fair value gap, price on this slightly higher to sweep these highs, which meaning it was probably like reaching for some liquidity. We also didn't take out this previous high, but we took out this high and this previous high, this previous high and this previous high, which are actually higher lows, if we're being honest. We're on a 15 minutes, so that means those actually are still lower highs. And then we just came and broke this structure right here, making a higher high from this previous high. So, and we still have room on this, within this range right here, this fair value gap. So we could get a sell-off and then reach right back into there for the sell. As you can see, this is really strong here. This is a strong area because that was a strong push down for a nice move. How many points is that? That's 49. That's from 7,449 down to, that's about 50 points. That's nice. This one right here is like from 7,490 all the way down to 7,320s. That's tough. That's a huge move. 100-point move here is like 1,000-point move on the NASDAQ. And you know, if 1,000-point move, catch a 1,000-point move, that's a big move. 300 to 400 points is pretty typical. Like, that's a nice moving day. But 1,000 is like, hey, that thing was running today. So you just know that if you're experienced with the NASDAQ and you're experienced with the S&P 500. So today we had a big move. This was 100 some odd point move. We came from the 340s on up to the 500 almost, basically the 500s, right below the 500. And so that's like a 150-point move right there. That's huge, you know what I mean? So right now I'm going to look for us to potentially fill. My next areas I'm checking out, areas of interest, would be this fair value gap right above here. It would be this fair value gap right above here for the rejection. Boom. And then to dip back into this fair value gap. So the trade might look something like this. We could probably take it from this area and then just have a wider stop, but that's going to decrease my risk to reward ratio. So what I want to see is, I seen we getting a rejection from the gap. So we seen the shift of structure on the 15, right? Because it's all part of strategy. If you've been watching, you know the strategy is we want to see a 4-hour area of support and resistance. We want to see start to reject, we want to see the 1 hour rejecting as well. We want to go down to the 15 minute. We're looking for a shift to structure on the 15 minute and the possible 5 minute shift to structure. And then we're looking to enter the trade as it creates this fair value gap on basically the shift to structure, and you see the larger displacement start to come into the market, or you get that first indication of the market really trying to move. Yeah, so basically that trade, the trade I do would be something like this. We could take it from here, just get in right now and take it from here. We will have stops possibly right there, and then I could target something like, I could come to here, I could come all the way down here. I know we're going to eventually come down here, right? It's a 1 to 5. Now, if I can get a better risk to reward ratio, like I said, if I got my stops just right above this level, that turns into a 12 to 7. That's from a 1 to 5 to a 1 to 12. That means that if you know how to read and understand risk to reward ratio, that means if you risked $100, you would turn it to $1,200. If you on 1 to 12, on the 1 to 5, it will be turn $100 to $500, right? And this is probably going to take a day or two potentially. Today is already Thursday. This may happen Friday. It may take till Sunday. Now in futures, I can't really hold a trade that long. In my paper trading account and with a Forex account, yeah, I can hold the trade over the weekend, and then I think we should go ahead into this trade. We're gonna go for a sell. I'll keep my stops low. I'll keep it right above there. I'll risk 1,200. So I'll just look for it to sweep the previous low. So we'll make roughly 8 on it. I'll go ahead and do another sell, and then we'll potentially make 17, right? We don't even need the whole move. So if I start to see something go against me, I'm cool with losing this 2,400. We're up about 10K right now. I'll risk 2,400. I'm not mad about that. I'll do that for this trade. I might actually bring it down some, actually, to closer to 2,000. I don't want anything above here. Cool. 2,000. And so now our trade is looking like you're risking 2,000 to make 17. This is like a 1 to 8 almost, right? This is like a 1 to 8 almost, a little over a 1 to 8. So that's where we're looking at as of right now. Just using this area of support and resistance. This is the area of resistance because this is our ceiling. We see that we have multiple rejections from this level where price is selling off. We're mostly in a downtrend right now. As you can see, if I was to connect these lines, we're mostly in a downtrend. There is a possibility we can push up though. This still is the month of July, but supposedly this is the worst month of July over the past, over the past like 20 years or so. Like this month hasn't been this bad over the last 20 years or so. It looks like it's kind of breaking out of this trend. But we'll see. It could be a fake. I'm just going with the structure and already where we're moving. We could continue up from here because we're already shifting up. And so, like I said, I'm willing to risk this 2,000 to figure out if this trade, maybe I should risk less. I'm like, I'd rather risk 1,000 because we don't know. But if it hits big, it'll just hit big. If it doesn't, we'll just be down $2,000. I mean, down to like only being up $8,000 in our account. All right, so I'll lose 2. That'll put us at 12K in equity. Cool, not bad. And we'll hold this. We'll sit on this. So that's where we're at with that. Let's check the news. I need to clean this keyboard, bro. I've just been like running, like just going and going so much that I haven't really been doing the best with my just like routine maintenance things. I think y'all know how that be. So I got to create a system around just getting my certain routine things done, especially as I'm adding to my lifestyle. Because y'all just see, we just purchased the car, and with the car being purchased, that's just adding to the lifestyle, adding to more things we got to take care of. All right, so look, this was today. We had advanced GDP and core PCE came out worse than expected. Advanced GDP price index came out better than expected, right? So that was this one. So this one came out worse than expected. The previous was 2.1%. The actual came out, and the forecast was 2.1, so it was worse than the forecast. On price index, core PCE came worse than expected. And then we had advanced GDP price index quarter over quarter came out better than expected. And then we had unemployment claims was basically unchanged. Because it's all black, it's not red and it's not green, so basically it's unchanged. That's a decent range where it's not like an issue. Previous was 188K. I thought it was actually something different. Whatever. Forecast was 201K. We had 197. So with no rates went unchanged, and the market continues selling off. And this leads me to believe right now that this is just a pullback for us to continue selling off, because the market is doing okay. But when you think of, it's like, what is investor sentiment right now? With investor sentiment right now, it's like with rates being unchanged, that means the economy is still thriving or still growing at the rate we're at. So that means that we're just able to handle this, our current situation, our current money supply. It's like money is still pretty cheap enough for us to grow. So that means that investors might pull money out of the market. They'll pull money out of the market to go borrow, right? For growth, basically to expand and grow their businesses and grow the economy. As you can see, we see that unemployment claims they're basically been fluctuating, but it's not like crazy, right? It's coming down, like it had it coming down, right? Because I think the last one was like 157K. It wasn't 188K. Like, what's it say? Where's the numbers at? Nah, they say it's 188K right here. If you look over here to my left, right here, if you look up here, when I go on top of the number, they say it's 187K. I thought it was like 157 last time. I swear I seen 157. They said it was 188. Whatever. Maybe that was a correction. And then we had a slight spike up right here. And it's like that tends to happen. As you can see over the graph, you get these lows, then you get a spike up. You have a low, and then you get a spike up. You have these lows, and then you get a spike up. So really, what I need to better understand here is that what is the natural reaction to the market? What I've been noticing is that it seems like the market, like what you might expect the market to do in this instance, like if these were bad, advanced GDP, core PCE, they're red, advanced GDP is orange, the red have greater impact than the oranges. These were worse than the forecast. This is the only thing that came out good, but yet the market pulled back. But also the market pulled back because we're in a downtrend. So this is just a pullback, in my opinion, and we pull back right to a resistance zone where we've been selling off and we're getting a rejection. So it sounds like, to me, overall, this is going to continue. The market is going to continue selling off. We have a fair value gap that was lower, that price just rejected from before it made this upward movement back to the area where it's been continuing to sell off. So sounds like this is basically inflationary for the market, meaning inflationary means that it's going to inflate the market, meaning that it's going to, not that money is tighter. Deflationary means things would expand. Inflationary means that things will sort of tighten. And we can look that up. Watch this. Inflationary versus deflationary. So we're going to learn together here. Inflation means rising prices and lower purchasing power. Deflation means falling prices and higher purchasing power. Prices go up, money loses value over time. People are encouraged to spend or invest now rather than later. Deflationary means prices go down, money gains value, and people tend to save cash while delaying purchases. Inflation causes higher consumer demand, rising production costs, or an increasing money supply. Mid-inflation, about 2%. Deflationary risk, weak demand or shrinking credit can trigger a downward spiral of lower wages, business layoffs, and so between how does this affect and how it affects the market and how it affects futures. Inflation means prices go up. Deflation means prices go down. These two trends change futures contract values by altering purchasing power, interest rates, and the cost of holding physical goods. So we're reading right here. Let me see. These two contract values, altering purchasing power, interest rates, cost of holding physical goods. Okay, impact. Futures fall. Deflation on futures. Commodity futures fall. Prices for oil, metals, and crops drop because demand shrinks. Financial future rise. As economic activity slows, central banks cut interest rates, causing safe haven government bond futures to increase in value. Falling asset prices can trigger heavy margin calls and force selling across all futures categories due to shrinking market liquidity. Am I the only one confused? I'm confused. Bro, why is my hair sticking up like that, bro? I gotta get my hair down. So, deflationary causes the futures market to sell off, and inflationary causes the futures market to go up, or to market to buy up. Let's see. Yes, that is general rule of thumb for physical commodities, but financial and stock futures behave differently. Inflationary buy up. Investors buy physical commodities to protect their cash value from losing value. Deflationary sell down. Traders sell or short commodities because demand drops and cash becomes more valuable than physical goods. Okay, I think I'm understanding. Inflationary mix sell. High inflation hurts corporate profits through rising input costs and higher interest rates, often leading to selling. Deflation usually signals a severe economic recession, causing corporate earnings to crash and stock futures to face heavy selling pressure. We're looking for index futures, stock index futures. What is that? So it says stock index futures react uniquely to inflation and deflation because they reflect corporate earnings, profit margins, and interest rates rather than physical supply. Both extremes generally pressure stock futures downward, but they do so for completely different financial reasons. Before trading concentrated index contracts like S&P or NASDAQ and Q, you must understand that high inflation or outright deflation carries a significant risk of extreme market volatility and capital loss. Sounds like both cause a sell-off. Like, well, so how high inflation drives index futures down, how deflation triggers index futures selling. Phase structure virtual double whammy from operational costs and monetary supply. All right, I gotta study this a little more, but off face value, it's like we had a pullback, and just because we pull back doesn't mean that the market is like about to turn around or continue going up, which it could. Like I said, we have a fair value gap right here, and the market is absolutely rejecting this and pushing up right now, rejecting from this level. So I guess my question is now, it's like, how is the current rates, how is the most recent FOMC decision affecting the futures stock index market? Making mistakes over here. Not the greatest typer. Decision to hold interest rates. So it says July 29, 2026, FOMC decision to hold interest rates steady triggered a sharp sell-off in the stock index futures market, even though the Federal Reserve kept the benchmark rate at 3.5% to 3.75%. The underlying details of the meeting severely rattled investors. Stock and futures faced heavy downside momentum due to a few critical factors from the announcement. Why stock index futures sold off? Hawkish, right? The hawkish hold shock. Investors expected a clean, unified pause. Instead, the committee revealed a highly divided 9-3 vote. Three prominent Fed officials, Lori Logan, Neil Kashkari, I like that, the Beth Hammock, aggressively dissented, demanding an immediate 25 basis point rate hike to fight stubborn inflation fueled by Middle East energy stocks. September rate hiking pricing. Because of the heavy dissension on the committee, rate futures quickly repriced to lean towards September rate hike. Stock index futures dropped because they had to immediately price in a higher cost of capital for corporations earlier than expected. That is huge. Stock index futures. I'm going to read it again. I'll highlight it. So it says stock index futures dropped because they had to immediately price in higher cost of capital for corporations earlier than expected. The Warsh, and we move on. The Warsh communication disconnect. Newly appointed Fed Chair Kevin Warsh explicitly declined to give explicit forward guidance or future policy clues during his press conference. This lack of clarity left institutional traders blind to the Fed's next structural move, forcing them to reduce exposure and liquidate index futures positions. It says, so down here it says, directly following the press conference, Dow Jones plummeted 1,100 points, making it the worst trading day in over a year. Tech indices took the hardest hit, dragging the broad NASDAQ 100 down roughly 11% from its June record high. Interesting. You say what's up to Matt? Hey, Matt. I'm gonna cut this video short because this is getting spicy over here, y'all. This is getting spicy. We diving into it. We figuring out what's going on. So we see how, and it makes sense because if you don't know about indexes are made up of a bunch of stocks. Stocks are just a bunch of different companies. Usually they take in the top. NASDAQ is made of the top 100, typically tech stocks. Dow Jones is made of the top 30 industrial stocks. And then you have the S&P 500 is made of the top 500 companies. Usually it's mostly tech. And then so that's what is their portfolios are made of, right? Those indexes are made of those companies, and it's based on the company performances, which is why they are talking about earnings reports and the cost of money, because when it's cheaper to borrow money for them, they're willing to spend more money. They're willing to fork out more money. When right now without the future guidance, they're like, yo, we don't know what's going on. Pull our money out. Let's take our profits and get ready to sit on the sideline for a better situation to happen, or they might need to move it to a better asset, better performing asset. So let's see how gold. If we go look at gold might have been going up because of this situation. Let's see. Gold actually did go up. Gold did go up. So y'all see, we see gold actually shot up, and it actually got up. Yeah, gold has been going up, so that makes sense. And this is going to be good for us in the future, because now when we get some news like this, we can expect stuff like this. Because I was wondering, like, why did gold shoot up like this yesterday, and then today we just continued up after this pullback? So it all makes sense to me, man. And it's getting clearer. I'm not saying I understand everything completely, but the information is there and we can find it. So that's all I got for y'all today. It's your boy Montego Ramon. Thank you for tapping in with the Risers X channel, where we rise to the occasion, man. Hey, y'all stay tapped in and be looking out for the next one. Peace.